Hey guys, weekly IBD 50 video sponsored by MarketSmith. There's a discounted trial available in the comments below. Just click that link. We're going to start off with SMH, which has broken out from a head and shoulders bottoming type pattern and holding up relatively well on the pullback as the SPYs, the Qs pull back in as well. So SMH did two things. On the breakout, it was showing relative strength, and also on the pullback, it's showing relative strength. You can see here, you see this blue line, this is versus the S&P 500. So it's showing relative strength on the breakout, showing relative strength as the market is pulling back in. So there are going to be some strong stocks within this area of the market. So let me take you through some of them that are on the IBD 50 list. So we're going to go semiconductors, we're then going to go into some other tech related stocks, then we're going to do an airline stock, a couple of oil and gas stocks, and we'll finish off with a healthcare stock. So I'm obviously very specific in terms of what it is I'm looking for, but these are some of the semi stocks that are showing a lot of relative strength. You can see that by these RS lines, so it's important to pay attention to the blue RS line. So that's going to be the stock versus the S&P 500, the market, and then the green line is the stock versus its own industry group. So ideally you want to see strong stocks versus the market, and then strong stocks versus its brother and sister stock, so comparing it to its group. So this one here, this is LSCC. You've got high quality growth funds. Most of them have been busy in recent quarters. All of them have been busy in recent quarters. One marginally decreasing their position, others adding to positions and or initiating positions. And what I like when I look at a stock like this here, it's obviously it's short term, it's extended here, wedging up, but I like the causality point. So there's a nice big base here that's been showing relative strength for a long time. You can see with these RS lines, stock has a history of being able to trend well. Earnings consistent, sales consistent and accelerating. You can see going from 125 million to 130 million, 150 million, 161, 172. The earnings per share ticking up, estimates look good, forward guidance looks good, all of that stuff, a lot of relative strength. So these are the ones I'm dialed into and then watching and waiting for them to set up as per my criteria. One that's been around for a while is RMBS. I think this IPO'd in 1997 or something like that. So higher quality growth fund, marginally increasing their position in recent quarters, but you can see the strength here. See how these RS lines, they're nearly 45, I'm no mathematician, but nearly 45-degree angle of attack. You can see the volume coming through, which is good. Sales accelerating, estimates look good, earnings have slowed down in the most recently reported quarters. Now short term clearly extended, it needs a little bit of work to be setting up, but a very strong semiconductor stock with some good estimates for the next 2 years. MPWR, so decent sized base here. You've got this RS line beginning to turn up now. Clearly on a short term basis this stock is extended, but this is the relative strength point. If you think about what say the S&P and the Qs have been doing, pulling back in for the last week and a half or so, this stock has pretty much done the opposite, and that's why you're seeing this RS line turn up like this. So if this stock can just base out the market can find its footing and this stock can tighten up, this is one that looks pretty constructive. You've had some high quality growth fund being busy, some increasing, some decreasing their position. Estimates look good for the next couple of years, sales accelerating, earnings look very good. Yeah, just a strong stock, but obviously short term extended can it tighten up, but stocks that are exhibiting this level of strength, potentially building these size bases, want to be dialed into this. A newer one, this is Mobilize. So you can go and read about the technology and kind of the story, if you like, behind the stock, but it's fairly interesting. So autonomous driving technology and solutions and advanced driving assistance systems. If you watch some of Tony Seber's videos, you'll know that TAS, which is transport as a service, which is basically AI taxis, if you like, is going to be a fairly big area over the next decade. So maybe this company can play a part in that, maybe it can't. You've got triple digit earnings coming through most recently reported quarter. Sales have been accelerating as well, so this is in millions, so 326 million, then a couple quarters later 394 million, then 460, 450, 4, and then 565 million. Estimates look good for certainly next year, 2024. Earnings share growth rate 3 to 5 year look back 85%. Now clearly the stock is pretty extended, but it's nice to see an IPO stock acting well. So watching for this one to set up, potential flag VCP in coming weeks, but very strong stock indeed. Semiconductor related, which is a strong area of the market, so keeping an eye on that one. Let's do a couple of other tech stocks while we're down here. This one here is ticker ANET. So what I like here is the causality point, right? And again, shorter term and longer term, if you think about what the market has been doing in the past week and a half or so. It's been pulling back, but see how this stock has actually just been holding up really well, actually pushing up. Fidelity in there, increasing their position in recent quarters, and see how this RS line is turning up here. Longer term, intermediate term, I would say this RS line is strong. It's strong versus its own group as well, which is this green line here. Stock has a history of being able to trend okay too, which is good to see, and I like this causality point. You've got this potential big VCP, 1 contraction, 2 contraction, 3 contraction, building the high lows. Just need to set up a very strong stock, good estimates, good earnings, good sales, all of those CANSLIM metrics. ROE 25%, earnings share growth rate 18%, comp rating 98, ticks many of the boxes, right? 40 billion, so nice kind of market cap there for some of these bigger funds, potentially like a Fidelity, to be stepping into. So ANET is an interesting one. Then similar-ish is PSTG in terms of the chart pattern here as well. I'd say ANET structurally looks a little bit stronger, but PSTG, so pure storage. See how this is, these RS lines turning up here really nice, and in the most recent weeks as well. See how this RS line on a really short-term basis is turning up there. Again, context of the market pulling in a little bit here, but what is this stock doing? The stock's doing the opposite. It's actually pushing up, it's holding up really well relative to the market. So this is subtle relative strength. So if these stocks can tighten up, these are the ones I want to be more focused on, those that are displaying the longer term and shorter term relative strength. Ticks many of the CANSLIM boxes, as you can see. I won't read it all out to you, but earnings share growth rate 3 to 5 year look back 62%, ROE 29%, so hitting on many of the cylinders. Decent base building in here, so we'll see. Needs a little bit of work around $30, low 30s for that pivot to form a strong stock. And then CNDS is the next one. Kind of looks similar-ish to an ANET in terms of how this base is setting up. But decent causality here. Take a look at these RS lines. See how the RS line versus the market versus the group. You had some higher quality growth funds being busy, one decreasing, one initiating, one adding to their position. So a bit of this, bit of that. Earnings estimates look pretty good. Earnings on a quarter-over-quarter basis look pretty good, as do the sales as well. But decent sized base here. So whenever I see a large base like this, again, context of the market as well, I think of this as a large cause. So it's the cause and effect point, building higher lows in the base. Yeah, it looks an interesting one. Let's go on to Airline. So airlines are showing some strength. You've got a couple now that are in the IBD 50 list. I think it's DAL or UAL is in there as well. But this stock here, from a technical perspective, looks better. Higher earnings coming through. You can see triple digits for the last 5 quarters. Sales look pretty high. You've got some good estimates coming through as well. And going all kind of Wyckoff on this one, potentially again a very large base, so very large base, and this here acting as a phase C spring. So this is your spring in here, spring, undercut the lows, rally, then you put in this structural higher low, and now potentially trying to form a very large cup and handle within the context of a much bigger base. Now earnings are due in a couple of days, so I'm not going to be buying it ahead of the earnings, but who knows, maybe this can kind of power out and then tighten up in coming weeks. But some of the airline stocks, when I look up in the sky where I live, I'm seeing a lot of airplanes. Not that kind of correlates to US airplanes in any way, but I'm seeing a lot of airplanes in the sky relative to what I was seeing 6-12 months ago. So I don't know, maybe there's nothing in that, but some of these airline stocks are setting up and they look fairly interesting. Then what is coming back, we're starting to see a re-emergence of oil and gas stocks. So it looked like a couple of weeks ago, a couple of months ago, they were kind of topping out somewhat. So you can see here with a Matador, I know it's a little bit small on this chart, but see how it was kind of rolling over here. But actually, what did it do from a structural perspective? Well, it just continues to put in these higher lows. So sure, it sold off for a week or two, but it actually builds a higher low, and then a little shakeout, and now just starting to tighten up again. So it's had 3 weeks where it's starting to go fairly tight. So these oil and gas stocks are on my radar as well. You've had 4 high quality growth funds have been busy. 1 marginally decreased their position, 1 reinitiated a position, the other 2 have been adding to their position. RS lines versus the market versus the stocks own entry group for Matador Resources looks pretty strong. So oil and gas stocks back on my radar for if they can tighten up and set up some pivots. Again, you're going to see this with a lot of these oil and gas stocks, big earnings, big sales coming through in recent quarters. You are then going to get into potentially difficult year-over-year comps. So we'll see how that goes. But at the minute, they look fairly strong, and a fair few of them are setting back up. PBF is another one. You can see this kind of VCP action to it. It's a little bit choppy, but see how this is building higher lows in here, tightening up, RS lines turning up. Invesco Discovery, so higher quality growth fund, initiated a position in Q3, added in Q4. They're only doing that for one reason, and potentially forming a low pivot around $40, low 40s. So these oil and gas stocks Ones that I'm keeping an eye on. Again, big earnings, big sales coming through, so that's one. These are obviously IBD 50 ones. You can broaden your scan as well for ones outside of that. Just showing you some of the ones that I think look technically the strongest and ticking some CANSLIM boxes. This one here, this is Vista Energy, so very strong. Take a look at these RS lines versus the market versus the industry group. Very good, really good earnings, really good sales coming through. Estimates. Big breakout year for the earnings per share in 2022, and then 2023 not bad, plus 18% with the guidance up as well. So it's starting to go kind of sideways here. It needs a little bit more work, but that red line there is the 10-week. So can it just tighten up a little bit more in the high teens level? But that's what I want to be keeping an eye on. It has a history of being able to build some okay bases and trend. It's again, these oil and gas stocks, they are not kind of the smoothest of movements. They do chop around somewhat. So the management side of things can be difficult on them. And let's finish off with a healthcare related stock. So this is INSP. It's in the medical products industry group. Now, what is interesting about this stock is it's building a very large base, and you could go Wyckoff on this one again. So you could look at this as a very large cause. You could then split this. You get this really nice facey spring. I didn't draw that very straight, did I? But you get this facey spring with these nice shakeout demand tails. You then put in a structural high low. Take a look at these RS lines versus the market versus the group turning up. That's interesting. And then the company profitable in the most recently reported quarter. So you can see that you've had many quarters of where the company is losing money on an earnings per share basis, and then in Q4 of 2022 the company profitable plus 211%. Sales accelerating as well, so this is in millions, but 53 million, and then 78 million, 91 million, 102 million, 137 million. So that there is interesting. And then it's the causality point here as well, potentially a very big cause, fairly new in terms of its IPO, around about just under 5 years ago. So this is an interesting one. Can it shape up? The volatility increased last week. You can see that by the candlestick. It was starting to tighten up in here somewhat, but then you get this doji candlestick around the 10-week. So that there's going to be the 50 on the daily chart. So if it can tighten up, volatility comes down, all of that good stuff around that 10-week could look like an interesting setup. See this bar in here? If I try and point to it, see that bar in there? Oh, it's just inside week, really tight. The volume drives way up. So something like that is what I'm looking for with pretty much all of these stocks. So that's it, guys. I will wrap it up there. Thank you very much for watching, and I will see you in the next video.